So what are our POIs? Our POIs are, generally speaking, the zones at which we expect to enter, or zones at which we expect price to turn. Ideally for us, we're expecting to enter because we believe price is going to turn at some point. Generally speaking, you may or may have not noticed, but most of the times we're sort of going against what looks like the prevailing trend and trying to anticipate a change of trend for us to enter. This may be a lower time frame trend that we're expecting to change. This may be a higher time frame trend that we're expecting to join. But the points of interest are basically the points of entry, where we expect the market to make a change. So I'm just going to use first this line chart example, which we've been using all along. So what we've already established is, say market is moving upwards, we obviously have a up and down sort of pattern that we follow, right? And every time we find ourselves in a scenario where the market sort of pulls back like this, we obviously perhaps have a zone where we expect the market to come back to, all right? And then we capitalize on that zone for entry. So in this case, as we can see, price has already moved up, pull down, given us a break of structure, and obviously we're expecting price to sort of pull back down and give us an entry for us to continue with the trend. All right, so how we draw a point of interest is, normally we are looking for an area where we've got the last in the case of an uptrend, we're looking for the last sell candle before the buying momentum steps in to break structure. All right, so let's put that in text. Let's say buy scenario. We're looking for the last sell candle before price buys to break structure. All right, let's put it this way. So obviously, in the case of this example, we may have that when price moves, let me just remove this for now. In this area, we've got price coming in, giving us a peak point where it turns and moves in the direction of the trend, right? And if we look at candlesticks, we obviously know that we probably have a candle like this, which is on this point, which is a seller's candle or a bearish candle, right? That has been printed right before we saw a bullish candle push to the upside. So what we simply want to do is we want to mark that last and lowest sell candle and highlight it like this, right? So when we do that, this is the zone that we have that will be highlighted over here like this. So what we're expecting is for price to come back to this zone over here and mitigate this zone or fill this zone before price pushes back up. All right, it's literally that simple. So we're looking for the last bearish candle before we see buying momentum shift to the upside. As soon as we see that candle, we take our rectangle tool and we draw a rectangle tool from the wick, top wick, to the bottom wick of that candle. All right, generally speaking, we want to make sure that we accommodate, let's just type rules. Number one, we want to accommodate the lowest point that the market went before it reversed. Right, forgive my spellings. Right, so we want to accommodate the last point that the price went before it reversed. Okay, what do we mean by that? It means that sometimes this might be a green candle, right, like this. So the lowest point, let's just type LP, will obviously be over there. Let me remove this wrap. This will be our lowest point, but this over here would be the candle that we're looking for as a POI. So instead of just highlighting this last candle over there, right, we want to accommodate this lowest point over here, which is our LP, because when price comes back into this zone, it might just push to the very lowest point before price shifts to go up. Now what will happen if we have not accommodated this lowest point? We've left out a wick and we believe price won't come back to this lowest point. price may easily stop us out because we've drawn a zone like this. Then price comes in, stops us out. But in terms of market structure, this low has not been violated. So we're still valid in terms of a buy, but we've been stopped out of the trade, or for whatever reason, if we entered, we have been taken out of the trade before price made the commitment to buy. Okay, so we always want to make sure that the lowest point is accommodated for like that. And then when we have that lowest point, this is the zone that we watch for a reversal. Okay, so even if you're not going to be using limit orders and you're going to be using confirmation orders, if you don't accommodate the lowest point like this, and price comes back in and it surpasses your lowest point, by the time it gives you your confirmations outside of your point of interest, you might then not find an entry because you believe that the point of interest has already been violated, right? So if you're that guy who's going to wait for our entry schematic, which will obviously be looking like this, let's do that. Right, if you're going to be waiting for entry schematic that looks like this, if this price blasts through your point of interest, you may have reason to start to believe that we're already in a seller's market, that price may have already violated to continue for a sell. When you see this confirmation, it can make you unsure of whether to continue with the buys or to start watching price for a sell, unless you're obviously seasoned with market structure to know that this low has not been broken, but your entry conditions may be violated. So you obviously want to make sure that for that reason you keep all your LPs accommodated for before you mark a zone. Okay, right, so you mark a zone like this. The opposite is also true in a scenario where you are buying, right? So let's say we have price in a scenario where you're selling, so you have price come down like this, and then bang, and then a continuation, right? So you obviously have a bearish break of structure over there, and you want to look for some candles in this zone over here, right? For an area where you expect price to come back, fill this area, and then continue to the downside. Okay, so what do these candles look like? Right, so we obviously want to make sure that our rectangle accommodates the highest point and the entire buy candle, like so. I hope this is making sense, right? So let's type again over there, let's say sell scenario. We want the last buy, or let's say last bullish candle before price sells off to break structure. All right, like that. So this is our last bullish. Let's just use the proper words, last bearish candle, like so. Okay, and obviously we want to write our text to indicate this is our highest point. This over here is our highest point, and we've drawn our point of interest in such a way that we accommodate the highest point, or the let's just write it this way. Let's just write it as the swing high. Right, this is the high that causes the break of structure. So we accommodate the swing high, and obviously this lowest point we may also want to call it our swing low point. Okay, so we always want to make sure that we accommodate the swing low. So in this case, we're going to do that. We mark this as our point of interest, and then over here we know that this also is our point of interest. Okay, it's that simple. All right, so we're waiting for price to come back into this zone. Let me just move this. We want to wait for price to come back into this zone, give us our confirmation pattern, and then we take a short. Or if you're one who doesn't like to wait for confirmations and you're going to take a risk entry, you'll simply have a pending order in this zone, and you wait for price to come back in. You take a short, and price goes in your direction. All right. So this is how we draw our points of interest on a candlestick chart, and this is what we want to look for. In terms of my chart, obviously you may have seen now that my colors aren't your conventional colors, which look, red and green. For me, I use green and white, sometimes blue and white, whatever the case. I change my colors a lot. But obviously, you just want to have some sort of cognitive understanding of what is your opposite candle in a scenario where you're buying, what is your opposite candle in a scenario where you're selling. Otherwise, what I realized is sometimes if you are not strong enough psychologically, you may find that because you've got price moving up and a series of green candles moving up, you may not be, inclined to want to sell when you see price return to this point of interest with a series of green candles. So that's why I always mix it up, and I don't like to use candlestick patterns or candlestick confirmations. Not that they don't work, but it's just not something that I choose to use for confirmations. I find, in my opinion, that you may be susceptible to all sorts of trickery by the market makers, and they may induce you to make a decision which may not be what's going to happen next. They may induce you to sell, and then the market is going to buy, and so on and so forth. But obviously, that's a debate that I'm not willing to get into for reasons that are obvious. So it's always best to do what you think is best for yourself. If you think you'd rather wait for an engulfing candlestick to show you that price is committing to the downside before you take an entry, that's always up to you. All right. So in terms of the scenario that we have here, this is what we're looking for. Now, obviously, let's assume this is our major structure. So let's write H1 for a major structure, right? So let's assume this over here is our major structure, right? And then we want to, where is this thing now? Okay, there we go. Right, so we want to show what this all looks like when you have internal structure operating inside. Okay, so remember, when you look at the internal structure over there, right, you may find that now, instead of having one point of interest or one last bearish candle before price moves on to break structure, when you look at internal structure, you might find now you have another bearish candle here over and above the fact that you had a bearish candle over there, right? So let's do that. Let's clean it out. And now the question becomes, which point of interest are you going to select for you to find entry? Because when you move on, let's call this our, say, M5, right? So before we see a break of structure on the M5 pulled back and shot up again. Now obviously we've got this over there, and we've got a zone where we accommodate the last point, or the swing low, which is over there. So we've got two areas where we can sort of anticipate price to return and reverse, because price could move over here. My bad. Price could easily move over here and reverse, because yes, there is obviously a last bearish candle before price broke structure that's over there, and you also have price could also move lower to test this point where we have the lowest swing low before price moves up. Price might as well just break through this, right? Because price is price, the market is the market. It doesn't owe us anything. It doesn't owe you any promises to say this is the last buy candle. You may have another buy candle that may be over here even sometimes, right here. Why? Because you may see a scenario where price comes in, rejects over here, and then pushes up, and then all of a sudden this is another last sell candle that you or last bearish candle that you have before price moves up. Okay, so the question now becomes, which of these zones are you going to mark up as the most probable zone for a reversal to take place and a trend continuation to take place? That now becomes the question. So now the answer to that question isn't necessarily in us saying we know exactly what's going to happen. No. The answer to that question is in us acknowledging that we don't know and finding certain confluences or rules that we can use to determine how we choose a point of interest. And we'll get into that a little more when we look at our confluences later on. But as for now, I'm trying to bring this up so that if you're going to look at a pricing chart for yourself, you don't get confused and say, this is the last buy candle, it wasn't respected. This is the last sell candle, it wasn't respected. There will be many last sell candles, many last buy candles in most situations. And what you'll find is you will have to find a method that you can use to eliminate the zones that are least likely to be respected and the zones that are likely to be respected, right? So let's go to a chart and sort of look at what it looks like on a pricing chart. Let's go to NASDAQ. Am I in the 4-hour chart? Yes. Okay. So let's look at this scenario over here. So what do we see? We see that obviously price is moving to the downside, right? How do we know price is moving to the downside? We use market structure. We obviously see that with a breakout structure here, we've got a breakout structure over there, and with a breakout structure over here, which is bearish. If we are to use our trend lines, we know that if we're going to use our major points, we can use this, right? This is also valid as a trend line. And if we're going to look at our nature's theory, we obviously see that we've got a strong impulsive move coming in here, a minor pullback and a strong impulsive move. So everything is pointing to telling us that the market is strongly bearish at this moment, right? So where is the last bullish candle before we see sell side liquidity? Before we see, sell side momentum, it's over here on this time frame, right? So obviously, if we use this as our point of interest and we just let price play, we see price getting in there and then it respects that point of interest and then it moves lower, going on to what? To break structure over there. It's simple, right? It's simple. But now when you begin to look at this zone, now price has broken over here and you begin to look at another zone over here, you start to realize this is the last buy candle before we see sell side momentum. But we also have a high where price could come to test. Let me just remove this now. This is our new high over there. So price may also find its way to this point over there. It may find its way coming up over here because this is the last swing high before we saw price break structure. All right. So now all of a sudden we may have two areas that we may look at. We're not going to mark this all up, but we're going to talk about how to refine these sort of areas and find your entry, right? Let's look for another example where we can find our entry. So let's move to this one over there. So we've got a bearish breakout structure again. Market structure is obviously confirming to us that it's bearish with a lot of momentum to the downside. And then this is obviously the last bullish candle before we see sell side momentum to break structure. This point also includes our swing high or our lower high, which caused the break of structure. So if we just play price and wait for price to do its thing, we know this is our point of interest where we might expect price to come in and respect, right? Look at that. Sorry, my bad. So let's just take it a notch back to this point. So we've got price coming in, tapping into a zone, rejecting and moving downwards almost instantly, right? If we move to the next candle, we see this momentum rejection. So if we go back to the 1 hour chart, now we're sort of combining some of the concepts that we learned. We know this was the lowest point before we saw another breakout structure to the upside. So this is a change of character because we'd seen a bullish breakout structure right into a zone over there. Right, price taps into a zone, comes in, changes structure. Okay, now we have a change of character. We're going to look, we expect price to pull back and sort of drop down. So the question then becomes, where is our next zone where we expect price to sort of reject? Where's our last bullish candle before we see sell side momentum for a change of character? It's over here, right? Which means we might see price come back into this zone, reject, and then fall lower, right? So let's just play price again and be patient. Right, price taps into a zone and immediately taps into the zone. We see the momentum drop to the downside, and we may obviously have a take profit zone that is somewhere this low, and we've already got two entry opportunities where we could have entered, right? So let's talk about refinement of a zone, because in this case we know that this zone over here is obviously too big. Let me just move this. So trying to place a stop loss, I mean, of I don't know how many points. This is obviously 130 points, and you're trying to target this over here. Yes, the risk to reward ratio is good. You may have a 3.6 um, risk reward ratio, which is certainly fine, but you know, these are so many points. In my opinion, you don't want to find yourself in a situation where you've got a very large stop losses. It's just not favorable for me. I find it may be ideal to have smaller stop losses and better risk reward ratios. All right. So obviously we don't want to come in and say this is our last bullish candle before the sell-off takes place. We can just refine this zone. How so? We go to a lower time frame, right? Go to 30-minute time frame. Now all of a sudden you can see that we have another buy side candle over here, another bullish candle that's floating somewhere over here. So if we just come in and refine there, now you see all of a sudden price comes in, it taps into your zone, right? And look at what happens to your risk reward ratio. It becomes a 1 to 14 risk reward ratio, and all of a sudden you're making a lot of money from the very same trade that would have given you a 1 to 3. It would have given you a 1 to 3. It's now giving you a 1 to 14, simply because you could refine to a lower time frame and you could find an entry on a POI on a lower time frame, right? So this is definitely something that is of value for any trader. Let's go back to the initial 4-hour zone and do that again, right? Let's just remove drawings. Okay, so let's do the same thing for this previous example. So we had price breaking lower over here, give us a bear break of structure, right? And then this was obviously our 4-hour zone, okay? And then if we just refine it, we go to the 1-hour chart. Let me just make sure this is neat. Go to the 1-hour chart, come in, refine again, make sure it's much tighter, much smaller, and then you play price, okay? Play price, wait for price to come into your zone. If it does tap into your zone, then you're in the money. Let's do that, and there we go. Price taps in. I'm sure if you even refine even lower to the M15, you would have still been tagged into the trade, having accommodated the highest point. So our highest point is obviously with this candle, right? Let me just zoom in to make sure we're still together, right? So this candle over here constitutes the last buy side candle before the price drops, and it also accommodates the highest point that price has reached, right? So if we go back to the 4-hour chart and we just do that, you're going to realize price tapped into that zone very neatly, despite that the zone had been refined this way. Price taps in, and obviously our risk reward ratio becomes even better. Now instead of having 100 something point stop loss, we now have a 28 point stop loss over there, and price goes in our direction, and we have an opportunity to find a re-entry if we are the guys who wait for momentum or price to show that it's changed its direction, which I believe we are, right? We're going to say this is our change of character over there, and then we just wait for the market to come into a zone. Let's see if we refine to the 5-minute whether we're going to be tagged in. So this is the last buy side candle. This is the high that we have. So I'm looking for the candle obviously that's closest. It's closest to the high point, but also it's probably the last buy side candle before we see selling momentum. If I pick this candle over here, you'd obviously appreciate that the zone is going to become really big, and I'm trying to refine it so that it becomes smaller. So this is the last sell candle, but this is the last buy candle, but it obviously doesn't accommodate the highest point which I think price could come to. So I would do this, right? And then we would just have to wait to see if price is going to trigger. There's obviously a downside to over refining these zones, which is price may not pull back into that zone and trigger you for the trade. Okay, so there we go. In this case we were triggered, Now look at that. We've got a 26 point stop loss. We've managed to find that we can even make this even bigger, our risk reward. Our risk reward now has come to a 1 to 20, nearly a 1 to 21 risk reward ratio. Obviously, we're not the type of guys who are looking to be finding these kind of trades and holding them till TP. I'm not that kind of trader who wants a 1 to 21. Sometimes I find it would just be greed to want to take it all the way up. If you have a way of trailing your stops and making sure you make the most of the trade, you should be happy. But I think somewhere within all these zones over here, you must be happy to take full profits in case price pulls back before it hits your TP. You've got a 26 point stop. What do you need 500 points for? So I think you get the point. You get the point. So that's how we sort of refine our zones. Go to a lower time frame. Look for that last buy side candle. All right. So in this case, with a breakout structure, let's go back to the 4-hour and let's just watch price again. Now let's start to include our internal market structure to see if we can identify any zones that we can expect price to pull back from. So obviously, our first zone is this one. This would be our 4-hour zone, right? Where we expect that price may come back to. And let's just do that to accommodate the high. And if we just wait for price to play out, we know that price can pull back, but price does not have the obligation to reach this zone. Price might come in much lower over here and continue to the downside. When we see that happening, it means there's a probability that there's another buy side candle that's somewhere within this move over here, which would have been respected for a what? For a sell. So what do we do now? Let's just wait for price to do its thing, choose the speed. Let's wait to see if we're going to get that pullback that we're looking for. In this case, we don't get it. Right, now we have another breakout structure. So let's erase these things over here. Keep it neat. Right, so we have a breakout structure over there. Then we wait for price to sort of pull back. So according to this, we obviously have this as our highest point, right? And we may have some internal zones, or in this case, we actually don't. But if you had to look at a zone that doesn't have the high, the swing high accommodated, it would be this zone over there. This is significantly the last buy side candle before we see the market move to the downside, right? So it doesn't mean that price is obviously going to respect this zone. Neither does it mean price is going to respect this zone, which we would have refined over there. But it's now about us getting our confirmations when price comes back to these zones for entry. So let's keep it neat and then let's play. So we expect price to either respect one of these zones when price pulls back, or if it pulls back, to give us at least a 1 to 3 risk reward trade. So let's wait. Oh, there we go. I think you may have seen what just happened over there. We had our 4-hour zone being respected, and I think price tanks from here on out. So let me just show you what just happened over here. So obviously we refined this zone to make it much smaller, but as you can now see, price did get into the 4-hour zone like that, and it gave us an entry, but it didn't reach the very top, which we would have wanted to see, which is why then refining becomes a bit of an issue if you if you overdo it. So you obviously want to find a balance to make sure that your entry zone is not too small, and you've got significant room for the trade to trigger you in. Right now, if we look at this first zone that we plotted here, this zone got annihilated, and obviously probably we didn't get a confirmation within this zone for our entry, which is perfectly fine. So price breezes through. If you're the guy who just works on a sell limit over here, you obviously take a loss, and then if you work it on this zone, then you're in the money as price respects your setup and moves straight. Let's see if it hits TP. Plays around before we obviously see TP being hit. So I think now you get the point of how this works. So let's follow price again and see what happens after we get this breakout structure over there. Whether price continues to be bearish or not. Okay, so price comes back in to this zone again. um, which obviously has to do with this week over there. So as you would appreciate, this was the last point that we saw price reaching, and this would have been a swing high. And as a swing high point, this would obviously be the last um, lower high before price breaks structure. And when we see price reaching this point, this is why I was saying, if you mark out this zone and you call this last candle, and I'm referring specifically to this one, this last bullish candle, you say this is the last candle before you see price tank, and then you stretch it over like this, and you don't include the highest point. Price can simply breeze through and go and test the highest point or mitigate the highest point, because if we go to lower time frame, which I'll assume is the M15 in this case, you'll then find yet another last buy candle that was over there, like so. And obviously, what do you see when you move to the right? You see that price comes in, respects that zone, and tanks. Yes, we do have a bit of a surplus of the zone. It's perfectly fine. Again, the market is not perfect, but the important thing is the zone was respected, and we find that if we work on and we're at a bit of a liberal stop loss somewhere over there. Of course, I'm cherry picking to make this illustrate my point, but if we had a bit of a liberal stop loss over there, then of course our trade would have been respected and price would have still tanked to move right to our take profit to give a 1 to 12. I hope this is making sense and everyone sort of now gets how to draw a point of interest. So obviously in this case as well, if you look at the 1 hour, this was a point of interest. The danger of just working on a point of interest and saying, I'm going to wait for price to come in. Why is this a point of interest? This is one of the last buy side candles before we see price tanking to break structure of this low over there. So it is also a point of interest, all right? But in this case, price does not respect it. It comes straight up to respect this very, very last point of interest over there. It respects that, and then price drops lower. Okay, so in the next video, we'll be talking about how you can spot the right points of interest and how you can combine that with market structure to sort of find your feet and start making money in the markets.